All right, welcome everyone. You see the headlines, and you absolutely know the market is where real wealth is built. But let's be honest, just staring at your cash, sitting quietly in a bank account while you try to figure out exactly how to start, well, it can be totally paralyzing, right? So today, in this explainer, we're going to turn that analysis paralysis into a really clear, actionable framework. We're breaking down a remarkably simple, four-step process to get you actively investing in the stock market.
So here's our roadmap for today. We'll start at the stock market starting line, then hit step 1, opening your DMAT account. Step 2 is understanding your investment needs. Step 3, determining your investment strategy. And finally, step 4, monitoring your investment portfolio.
All right, section 1 of the stock market starting line. This vast, kinda intimidating financial world, it actually distills down into 4 highly manageable, repeatable blocks. It's like a giant puzzle, but a lot simpler. Investing really isn't some chaotic gamble. It's a structured process. It flows from the basic nuts and bolts of setting up an account, straight into a personal audit of your goals, then over to building a tangible strategy, and finally, the discipline of ongoing monitoring. So let's conquer these 4 phases together, shall we?
Moving right along to section 2, opening your DMAT account. Step 1 of investing.
So what is this exactly? Well, a DMAT, or dematerialized account, is literally your digital ticket to the arena. We don't trade physical paper certificates anymore. Today, the whole shebang lives in a highly secure digital vault. This account holds your securities electronically, and honestly, without it, you're basically benched. It is the absolutely essential gateway to actually participating in the market.
But hey, the good news? Getting this digital ticket is fast. You essentially just need 3 basic things to smash right through this first checkpoint. Your PAN card for your tax identity, your bank account details to actually fund your trades, and your Aadhaar card to verify who you are. Just compile those 3, and boom, you are officially in the system.
Okay, section 3, understanding your investment needs. Step 2 of investing. Now, the very first question you've got to answer for yourself is this. What is your initial investment amount? I want you to literally pause for a second right now and mentally calculate the exact starting capital you're bringing to the table. And look, it really doesn't matter if it's a massive lump sum or just a really modest monthly contribution. Actually, the stock market accommodates all sizes, but you just have to be radically honest about what your personal starting line looks like.
Okay, so once you know what you're putting in, you really have to ask yourself, what are your target investment returns? Like, what does financial success actually look like for you? Are you simply trying to beat inflation, just protect your purchasing power? Or are you aiming for aggressive, high percentage growth to build some serious wealth for retirement? Setting clear, personalized target returns anchors your entire strategy. Without a target, well, you're just throwing darts in the dark, right?
All right, now comes the really tough question. What is your acceptable risk level? The absolute crucial point here is this. The stock market goes up, sure, but it also violently goes down. You've got to confront your stomach for volatility. If seeing your portfolio drop by, say, 20% in a single month is going to cause you to just panic and sell everything, well, you clearly have a lower risk tolerance. You really need to honestly assess how much risk you can handle before it literally starts keeping you awake at night.
And to wrap up this self-reflection phase, we ask, what is your investment time horizon? Basically, how long can your money comfortably stay invested before you absolutely need it back? Are you saving for a house down payment in like 2 years? Or maybe your retirement in 30 years? Time is absolutely the magic ingredient in investing. The longer your horizon, the more capacity you have to ride out the market's natural storms and really let that compound growth do the heavy lifting for you.
Moving on to section 4, determining your investment strategy. Step 3 of investing. Now we formulate your battle plan, and this is built on 3 distinct pillars: selection, analysis, and estimation. First up, selection. You've got to choose your market neighborhood by filtering for market cap. So are you looking at massive, highly stable titans, or maybe small, aggressive startups? And by sector, things like tech or healthcare. Second is analysis. You really have to look under the hood here. Are they drowning in debt? Are they actually turning a profit? But most importantly, is the stock trading at a fair value today? And finally, estimation. Where exactly is this company heading in the next decade? Look, mastering these 3 pillars is exactly what separates calculated investing from blind gambling.
And finally, section 5, monitoring your investment portfolio. Step 4 of investing.
So monitoring your investments is a really strict balancing act. On one side, you're tracking stocks to make sure they're hitting the growth targets you set earlier. And honestly, that's the fun part, right? Where you get to watch your hard work and analysis pay off.
But on the other side is the much harder discipline, knowing exactly when to exit. If the fundamental story of a company totally changes, or, maybe your initial analysis was just simply wrong, you need the emotional control to cut your losses. It's kind of like tending a garden. You're watering the flowers for sure, but you're also ruthlessly pulling the weeds.
Well, there you have it. We've mapped out the entire journey for you in this explainer. The 4 steps are incredibly clear. Open that DMAT account, interrogate your own personal investment needs, craft your strategy through really careful analysis, and then maintain a vigilant watch over your portfolio. The whole blueprint is completely laid out in front of you, demystified and ready to go. But the absolute ultimate truth of investing is that the very first move is entirely yours. You can understand the theory perfectly, but absolutely nothing happens until you take action. So the question is, are you ready to take step 1 today?